G'day guys, and welcome back to another episode of the Aussie Investing Machine. Thank you so much for joining me. If you're new around here, this channel talks all things investing, and in these live streams, hope to cover a couple of stocks and then do a little bit of rundown on those. Talk about the latest news, what's been happening in the market, and then of course answer all of your questions. So I hope you've had a good week so far. We're midway there. Hope you had a good Easter break as well. It's been a very busy period for me, so apologies for not making a video this week, getting a little bit slack, but it has been a busy period. So I hope you're all doing well. Let me know how you've been this week and what you're doing this weekend. Love to hear it. And then of course, let me know about your investments as well. How have they been going, and what have you been up to? Have you made any new purchases? I'd love to know. Drop a comment below. So in today's episode, I wanted to look at two companies. One being 88 Energy, which we covered last week. There's been an update out of the company, and it certainly didn't go the way that a lot of investors were hoping. So we'll dig a little bit into that. And then another company which has had a huge week has been Cleanaway Waste. They've had a major acquisition, which has been a real strength for the company. They purchased a company called Suez, and you might have seen Suez trucks around, you might have seen Cleanaway trucks around, but in general they're a very strong waste management company which really nicely complements Cleanaway Waste. So without further ado, I'll share my screen and we'll jump into the presentation, and then we might go over my portfolio as well. So just bear with me. All right, hope you guys can see that okay. Just pull up the presentation for this week. All right, here we go. Livestream 19, almost at the big number 20. So the 88 Energy update. Let's go over that first. So there was an announcement, I think yesterday, that the company released on the ASX, and let's cover a little bit of what that said. So the Merlin 1 drilling exercise they were doing, their last report showed that there was signs of oil in a very oil-rich field. They know that the geology of the area is very strong, and there's trillions of barrels of oil which are untapped. So 88 Energy is trying to tap into that. This is in Alaska, by the way, northern Alaska, so it's super cold. We'll get into that in a sec. So initial observations indicated the presence of an oil signature, and that's what we saw in their previous announcement, and that caused their share price to spike. They had a huge gain, I think over 60%, so that was exciting. Now the announcement yesterday, not as exciting. So a power outage due to equipment failure necessitated pulling out of the hole for repairs prior to any sample being obtained. So a bit of a technical hitch. Not being able to sample these two most prospective zones does not preclude a discovery. However, analysis of sidewall cores and potentially further drilling may be required for confirmation. So that's essentially saying they didn't get what they were after in order to declare an oil discovery. So several samples were taken in zones interpreted to be less prospective on the way out of the hole, all of which contained low saturations of hydrocarbons, which will now be sent to the lab for testing. The presence of hydrocarbons in these zones is considered encouraging for the regional prospectivity, but it does not constitute a discovery due to the low saturation levels. So really they missed out on what they were looking for, which is a big blow, and we saw that reflected in the share price. It crashed yesterday and it's gone down, I think, a further 8% today. So we can see that share price movement. They went all the way up to 70 cents and now all the way back down to not 70 cents, 7 cents, my apologies, and now all the way back down to 2.2 cents. So pretty rough for the company. They also stated that it's now too late in the season to initiate flow testing operations. and the forward program will consist of plugging the well. So they'll have to wait till next year. Bit sad, I think, but I guess that's the nature of the oil search game. So while the presence of hydrocarbons in samples was encouraging, as we mentioned, it was too low to constitute a discovery. So that's really the news that drove 88 Energy down so far. Cleanaway Waste. So let's talk about this company. Cleanaway's principal activities is the collection services for solid waste streams. I'm sure you've seen Cleanaway probably out on the road. You might have seen some Cleanaway skip bins. So they do a whole host of things: management of waste transfer, recovered paper, metals, plastics, operation of liquid and hazardous waste recycling, refining of used mineral oils, etc., etc. So they do a lot of stuff, and it's all in the waste game. So the latest news out of the company was the announcement that it entered into an agreement on the 5th of April to acquire Suez, R&R in Australia, and this deal was worth $2.52 billion. So quite a big acquisition. Cleanaway will acquire a portfolio of strategic post-collection assets in Sydney, and these assets comprise 2 landfills and 5 transfer stations. So this helps to expand the total landfill opportunities they have, which obviously continues their operating life. The acquisition of Suez is expected to deliver attractive financial returns as well, and we'll see exactly why on the next slide. So in 2020, Suez generated a revenue of 1.4 billion, normalized EBITDA of 216 million, and an operating free cash flow of 199 million. And this represents an EBITDA margin of approximately 15%, which is pretty good. That's quite a high EBITDA margin. I'm not sure what their net profit margin is. It would be lower than that. Typically, these companies have a lot of tangible assets, which of course depreciate, and this would cause, this would generate quite a large tax offset. So you could expect their net profit margin to be quite lower than the EBITDA margin. From the CEO, the transaction is expected to bring together 2 highly complementary businesses and be strongly assertive to earnings per share when the integration is completed. Talk more about this in a second, the type of acquisition that this was. So whilst not all acquisitions are positive, there are certainly better ones when a business acquires a company that aligns with its core operations. So Suez and Cleanaway Waste are both waste management companies. So Suez is a very closely aligning acquisition for Cleanaway, which we just heard from the CEO. So waste management is definitely not a sexy investment compared to the likes of a company like Tesla, but it is a fundamental service provided to the community and corporations. So, and we can see this long-term capital growth of Cleanaway has been really excellent. If I show you their market index page, you can see this over the past 10 years, even from 2012, but definitely from 2016. They've gone from 70 cents all the way up to $2, so almost doubled in price, 100% gain. That's over 5 years, so pretty good compounding growth rate. Also, if we look at their dividends, where I had the page before, we can see a really nice, steadily increasing dividend. 2021 only the interim dividend paid, so we'll expect that to come in line with the previous dividends. And of course, in terms of the impact of the pandemic on the company, very minor. People were still consuming, certainly during the pandemic, and waste still needs to be collected. So no slowdown. There might have been a little bit of slowdown in terms of commercial, perhaps even construction waste, because some of those industries did slow, but your typical consumer waste, absolutely no slowdown whatsoever. Just coming back to the presentation, so so that long-term capital growth pathway has been excellent, and I'd love to know your thoughts on the company as well. Have you heard of Cleanaway sort of before it's had this little explosion? Is this your first time looking at the company? Yeah, drop me a comment, let me know. Are you interested in these types of companies? Certainly looks to be a good dividend payer, and it's had some pretty good gains as well. So love to hear your thoughts. ASX Analytics, wondering what Cleanaway's current EBITDA margin without acquisition. Yeah, well, let's have a quick look at that. Thanks for the comment, by the way. Good to see you on the live stream. So let's have a look. CWY, I think, is their ticker. Just jump into their financials. So you can see revenue's sort of been going up in recent years, but it seems to have fallen a bit from 2012, and this is kind of mirrored in the share price, but probably not quite the same there. So gross profit, or let's have a look at net profit. So gross profit 1682, and net income, looking for net income after taxes, there you go, 112. And yeah, total revenue was 2332. So what is that? Let's have a look. 112 divided by 2. So the net profit margin was about 5%. So in 2020, I don't know, the EBITDA margin would be before taxes. So operating income, it's close, would be 204. So not an exact EBITDA calculation, but yeah, sort of like 9%. So definitely lower. So look, it looks positive for the company. But yeah, interested to know, is it one that you'd be considering investing in or not? Certainly, I read, who was it? It might have been Fisher in one of his books, talked about, yeah, looking for companies that are not attractive investments. And that includes companies like waste companies, companies that do a lot of mundane stuff, as well as even like funeral companies. I think, what's the big funeral company on the ASX? Forgotten their name. IVC, Invocare. Yep, that's them. So if we have a look at IVC, although I think they had a pretty rough time during the pandemic, but we can see pretty consistent revenue growth, a bit of a drop off in 2020. They had a bit of a struggle there. If we have a look at their net income after tax, yeah, we can see it's been tailing off, but yeah, it's these sort of industries where, yeah, not super attractive to many, can really prove quite profitable in the long term. Another excellent example is like Philip Morris. Philip Morris International on the New York Stock Exchange. If we have a look at their financials, we could still doing quite well and increasing growth, and that's in a declining market, which is cigarettes. So a little bit to take away there in terms of companies that perhaps aren't that attractive to investors, but could still provide good returns even in a declining market. And this holds true even for like coal companies. 88 Energy, which we just spoke about, is an oil prospecting company, and a lot of people are of the belief that oil's on the decline. So yeah, a bit of an unusual one there, but yeah, Invocare, exactly right. So yeah, that's my wrap on those two companies. Just wondering if anyone's got any questions. Now is the time to ask. While I'm waiting for your questions to come through, I'll just have a quick look at my portfolio, show you how that's been going. A couple of companies are starting to turn around, which is really great. Beach Energy is my top performing individual stock, and then the ETF iShares S&P 500 is at 22% gain, is the best in my portfolio. Polynovo's tracking quite well at a 6% return. That's my most recent purchase, so really happy with how that's going. And Northern Star's slowly clawing its way back, now at a 17% loss. Kogan's still going backwards, so that's a bit sad, and we're still net negative, which is also unfortunate, but it's turning around. It was a lot worse. So PointsBet also coming through. I've read a little bit of news on PointsBet, and some of the apprehensions that investors had about PointsBet was that they were looking at reviewing the betting laws in New York, and New York represents such a massive portion of the betting market in the US. And if they determine that betting would become illegal again, then it would really hurt PointsBet's bottom line. However, major brokers in the US are sort of saying, look, even if that does happen, we think that PointsBet have a strong foothold in the US market. We know they're partners with NBC, so I still think the long term looks good for PointsBet, but I'd like to hear your opinions on that too. My second most recent purpose was Cochlear. It's doing okay at a 3% gain. It is a stock with quite a large market cap, so I wouldn't expect extreme movement. But yeah, it's been doing okay. Obviously, we know that elective surgeries are coming back online, so hopefully the stock price will continue to push upwards. But yeah, all good. Thanks for joining. I think I might wrap it up there, guys. It was a short stream tonight, but that's okay. Thanks to everyone who left a comment. Yeah, and I'll see you in the next one. Thanks for tuning in, and hopefully I can get a video out this week. I think I should be able to this weekend, so we'll see how we go. But yeah, thanks everyone for watching, and I'll see you in the next one. Cheers.